What's up, guys? It's January 30th, 2024. Had a range day. I think that's normal after having a trend day, so market expands and then contracts. Bar 1, strong. It's a strong bull bar. You can see a continuation from yesterday's bull trend. Have gap bars, pull back into the EMA, test this level, and it goes. Bar 1, strong bull bar. Bars 2, 3, 4, and 5 have bullish pressure. This is bad follow through for the bears. For the bulls. And here we also have bad follow through at highs. This also gives the market a head and shoulders reversal appearance. That just means the bulls tried 3 times in one direction and failed. So 1 push, 2 pushes, and 3. This looks pretty climactic for if we want to see a trend, we would want small orderly bars. But this looks like it's a buy vacuum test of the previous high made right here. And they have a pullback. Bulls try and push again for the bull flag breakout, double bottom, and it fails, creating a sell vacuum to the low of the day. But the low of the day was bar 1. Bears tried to get a really strong gap bar. If they close below bar 1, that would look like a nice reversal on a different time frame. Bad follow through for the bears. Bulls are buying the lows, and we can see that through the wicks here. They have a really weak channel. Here's the channel. Kind of looks like a bear flag. Spike, pullback, spike, pullback, selling, pullback up to here. So we can kind of count the legs. 1, 2, 3, 4, and 5. And that's just because I was counting the opposite bars. So really bad follow through below the EMA. And the context for this trade would be sideways to up after closing yesterday in a bull trend. And that's what we got. Look, sideways. Here's the range. It's a little more up. And then a sell vacuum. But I wanted to count the legs here real quick. So if we're counting opposite bars, it's 2 bar reversal at lows. So let me draw the low of the day, or the bar 1 low. Bears have a failed breakout and bulls reverse, creating a 2 bar reversal. 2 bar reversals are also breakouts. So it's a form of a breakout. So we're breaking back into this range. And bulls get the EMA and they push for a couple legs higher. This ends up being a trap at highs. Failed breakout by the bulls. Really bad follow through wicks here. So breakout, bad follow through also on the breakout. Everything's just bad follow through on a range day. It's really easy to be disappointed. We should expect we should expect to be disappointed on a range day. Excuse me, my tongue got tied there. So breakout, breaking back into the range, pull back, pause bar. We have another breakout above the EMA, pull back, up, pull back. Okay, so leg 1, leg 2, leg 3, pause. Now we have an opposite bar, so that this can count as leg 1, pull back leg 2. Then we have, and this is 3 pushes on a smaller time frame, which is like a wedge top, and then look, a small sell. When the trend channel line breaks, this creates a bull flag, and they go for a quick test of the high. They ultimately fail, leaving a small bear gap. When this bar formed, it happened fast, so it could be a quick sign of exhaustion. Inside bar at highs, bulls come down for the bull flag, we get trapped, creating a double top. When it's a double top, this means the bulls that bought here buy lower, and then they get out at their original entry, and then that creates a sell for a few legs down. So we have a double top here, trading at range highs, yesterday's range high, because we have a bull trend and then bears make money. So bears don't make money in the bull trend. So this is where the range starts, because bears made about 10 points right here, about 8 points. It's still, or actually, excuse me, it's touch from here. So 10.75 points. So that's the start of the range, and that's pretty much what we got. We pretty much stayed within that range all day. After this, we got leg 1, pullback because of the wick, leg 2, small pullback, leg 3, leg 4, and then that's like the micro channel. And then here would be the bigger leg, leg 1, breakout, pullback, leg 2, breakout, pullback. And these are all asymmetrical legs. Asymmetrical. So that's not good. That's more range bound. That's legs in a range. 2-bar reversal at lows. Higher low. This is an outside bar. This is talked about in Brook's Blue Book. If you guys check out the first chapter, he talks about after a strong trend, we can see a trend line break, put an outside bar in, and it could be good for a few legs higher. Here's leg 1, pull back, double bottom, leg 2, or you can count it. Leg 1, pull back, leg 2, and then bears get their 2 legs, leg 1, pull back, leg 2, double bottom at the low, or it could be a break and retest. This is a breakout, a 2-bar reversal. 2-bar reversals are breakouts back into the range. It's a form of a breakout. And then the bulls get their 2 legs, leg 1, pull back, leg 2, failing at highs, very wicky. They go for a new high of the day, but it fails. This is a bull flag, but it failed. So here's the pull, 1, 2, and then if instead of going up, it failed. All patterns can either pass or fail. So this could be a bull flag right here, and this bull flag passed. It broke out and had a few legs higher. This bull flag is at the high of the range. There's a lot more resistance up top. This is a sell zone up here. Every time price came to the top of this range, it sold off. I had the day broken up into thirds. That's what Brook recommends you do on range days. So you can do it like this. You can do it like that. This would kind of be the early low. So, and these numbers I have are 0, 1, 0.7, 0.3. This is 0. This is 0.3, 0.7, and that's 1. And Al recommends we sell, do nothing, and buy. Stops go right there. And if you follow that lead today, you actually would make money. Sell, buy, sell, buy. You can make a lot of money. And then at the end of the day, they had a sell vacuum into the EMA. We've been buying the higher time frame EMA. Here it is on the 45-minute chart. I switched my charts to 5, 15, and 45. Getting bad follow through at highs after a really strong bar. Not good for the bulls. They definitely want to see more continuation, at least by like 1 tick. Because now that they pulled back, this gives this a push. This makes this kind of look like a push, so it's 3 pushes higher. Here's the 45-minute chart. Double top here. And we pulled back into the EMA. Every time we pull back into the EMA, we've gone sideways and then pushed off. Sideways and pushed off. As soon as we touched it, we pushed off. As soon as we touched it, we went sideways a little bit. And then now we're going more sideways, so let's see what happens more if we go sideways for even longer. The pullbacks are getting way deeper, and there's that nice wedge top I was just talking about on the daily chart. I got the hiccups for some reason. That wedge top here, or it could be like this. Make that a different color. Yeah, so there's that wedge top kind of right here. Push 1, push 2, and push 3. Push 1, push 2, and push 3. So it's just a quick one today. Range bound price action. Nothing too fun. Everything was disappointed. I got trapped here, and then I kind of caught it early. I was like, you know what? There's the first 6 bars of the day are really bullish. This was probably a sell vacuum, and I went short here and I added. So, because I wanted to see what happens here. So I added pretty late in the trend, and that's punishing in range bound price action. So I called it. I got this leg. I got a little bit crushed right here, and then I took 1 trade here. I went short and I got out like right here, so it was really nothing. Pretty boring day. I'm probably not gonna trade tomorrow, or I didn't trade today because it's FOMC. I hope you guys did good. Keep using your stop loss. Hit the follow button if you learned something. I'll talk to you guys tomorrow.